In this video, we're finally going to complete this scenario, and on January 10th, XYZ is going to pay for the goods. So first ABC purchased the items, then on the 5th, ABC sold 5 widgets to XYZ, and then on the 7th, XYZ returned 1 widget back, and then on the 9th, there was freight charges that needed to be paid. And now XYZ is going to pay for the goods. So the first thing you need to figure out is, do they get the discount? And we already did that. Yes, they do, right? On the 5th, you had terms. The sale was made on the 5th. The terms were 1% discount if they paid within 10 days. Well, 10 days from the 5th is the 15th. You pay before the 15th, you get the discount. All right, so the discount is taken. The second question you have to answer is, how much does XYZ owe? So remember, and this is the mistake people make, they look up here and they say, oh, there was 5 widgets sold. XYZ has $750 in accounts payable. Well, XYZ owes $750, not so fast. Why? Because what did XYZ do on the 7th? XYZ returned one of these items. So you don't pay for something that you returned. Okay, so if we look at the T accounts, okay, here is XYZ has accounts payable. Initially it was 750, but 1 was returned, so 750 minus 150 is 600. 600 on the accounts payable side, 600 on the accounts receivable side, so the amount that's owed is 600. So now we know the amount that's owed, and we know we get the discount. We need to do some calculations. So the first thing is, we need to figure out, well, how much money are we going to be saving by taking this discount? Well, the discount is 1%. There's a 1% discount if paid within 10 days. 1% of what? 1% of the outstanding balance, which in this case, according to our T account, is $600, right? Not $750, because we returned one item, so it's $600. So 1% of $600 is $60. So XYZ is going to save $60. ABC is giving XYZ a $60 discount. So what does that mean as far as cash? That means that XYZ was supposed to pay $600, but they're going to get a discount of $60. So $600 minus $60 means that they're going to pay $540. So XYZ is going to pay $540 and ABC is going to receive $540. So I can debit cash here for ABC company for $540. And I can credit cash here for XYZ company for $540. So when you do this entry for payment, always start with the cash first, because that's the easiest thing to figure out, right? Okay, now I'm going to pay cash. Why am I paying cash, right? Or why am I receiving cash? Because there's an outstanding payable of $600 here, and there's an outstanding receivable of $600. So right now my receivable has a $600 balance, my payable has a $600 balance. I'm going to pay $540, and that is going to clear the full amount of the payable and the full amount of the receivable. Why? Because I'm getting a discount. So even though I owe 600, I don't have to pay the full 600 because I'm getting a discount. But when the whole payable is going to go away. The whole $600 payable is going to go away. The whole $600 receivable is going to go away, because even though I'm only paying $540, it's going to satisfy the full $600 that I owe because of the discount. So what that means is, I've got to clear here for ABC company. I've got to clear the accounts receivable for the full $600. I've got to clear the accounts payable for the full $600. And this also sometimes confuses people. Whenever you give a discount, the amount of cash you receive is going to be less than the amount owed, but because you're giving your customer a discount, you have to clear the full amount of the receivable that's owed by the customer, or the full amount of the payable that's due, because the discount is saying, look, even though you owe me $600, I'm going to allow you to clear your $600 debt by only paying $540. So for our accounting records, what do you have to clear out of accounts payable and accounts receivable? You've got to clear the full amount. So we're going to debit cash for $540. We're going to credit accounts receivable. We're going to debit accounts payable for $600. We're going to credit cash. Okay, so now we're out of balance here. We've got a debit amount of $540 and a credit amount of $600. What is the amount that's in the middle? This is where we have this new account, this contra sales account called sales discount. So whenever you give a discount to a customer, you're going to debit sales discount for whatever that amount is. And it's a contra sales account. So you have gross sales minus any sales returns minus any sales discounts, and that's the true sales for an organization. So here you have debit cash, debit sales discount, credit accounts receivable. Okay, but what happens on this side? Okay, what's going on this side? Well, to explain the account that we're going to adjust, we need to make a $60 adjustment on the XYZ side, right? What adjustment are we going to make? Well, let's take a look at it. So here, our accounts payable is $600, right? And I just debited accounts payable for $600. So now my accounts payable is zero, right? But how much did I actually pay? I paid $540. So if I go over here to cash, I'm going to credit cash for $540. Okay, $540. All right. So now, what is going to be my adjustment? Where am I going to put that $60? Well, remember what inventory is, right? What is inventory? Inventory represents the cost that I incur to purchase a product. Well, $50 was the freight charges. Remember that on January 9th. So that's my cost. I initially paid $750. Okay, $750, and then I returned $150. If I take $750 minus the $150, these two, right? If I just take out, let me just take this out for a second. It's $600. Well, did I pay $600? These two, the fifth and the seventh. This is $600. Did I pay $600? No, I didn't. How much did I pay? I paid $540. So whenever you have a discount, the sales discount for the seller is going to be a reduction in inventory for the buyer. Why? Because inventory, the balance in inventory should represent how much you actually paid for the item. Since you got a $60 discount, you didn't pay $60. Your cost was whatever the original cost was minus $60. So what do? We come to inventory and we adjust inventory downward by $60 to reflect the amount that we paid. So now if you look at this $590, what is this $590 made up of? It's made up of the $540 that I paid, right, for the inventory, plus the $50 that I paid for the shipping charges. So $540 plus the $50 is $590, and this $590 in inventory, this actually represents payments that I made, okay, for the items that I received. Okay, so let's go ahead and just journalize this on the seller side. So we received $540 in cash. Okay, I had a sales discounts of $60, and then I cleared my accounts receivable for $600. Okay, so notice my accounts receivable for seller is zero. My accounts payable for seller is zero. All right, and so that is the journal entries that you would make whenever you have a sale on credit with discount taken. And I broke this up into a couple of videos because when I first did it, it was such a long video. But you really need to understand this. If you can understand this, then the others are really simple. But make sure you understand the seller entries and then how they affect the buyer. Instead of doing it separately, I feel it's better to do it side by side so you can sort of see exactly what's happening. But become familiar with this, pause, make some notes. I will post this in D2L so you can see it, but make sure you understand what's going on.